All right, guys, welcome back to the channel. In the last 24 hours, we've seen the largest day in history of liquidations across Bitcoin and cryptocurrencies. And so we want to answer the question today, is now the time to be fearful? Is this the top that is coming in, seeing as it was the largest day in history of liquidations? Or is it a time to be buying the dip? Along with that, stock markets around the globe have had a pullback after putting in new all-time highs. And China has also been pumping on the back of more news around stimulus coming into their economy. So that's the questions for today's agenda at or on your home of macro cycle analysis with me, Jason Pizzino. I started investing in real estate back in 2006, then into the stock markets and futures markets in 2010, and then I found myself in Bitcoin and cryptos from 2017. So hopefully I can share something with you guys today in today's update. And if you do find value, make sure you hit that like button and of course subscribe to the channel if you are new here, because each of the day builds upon the previous day. So you don't want to miss out on any of that analysis. Today's agenda, looking at Bitcoin, of course, the stock markets, the 18-year real estate and economic cycle, cryptos, the market sentiment and the data, and of course, altcoins, our true altcoin market cap, plus a few of the crowd favorites, Solana, Sui, Pepe, XRP. But I want to start with the stock markets, of course. They did hit new all-time highs and have since reversed, at least in the US. Now, 6 days ago, I gave you this video here, just looking at the short term for the S&P, because we were seeing the volume dry up, yet the prices kept going higher. And in this video, around the 2-minute mark, I talked about the little pop up and the pop back down, the little dump that you see. And that's essentially what we've got. The pop up, bit of a waiting time here, and the drop back down. And what I was focused on was the lack of interest in the volume. That's what this is down here. You got the volume, and pretty much this market was getting bought up on lower and lower volume. It's not impossible for it to keep going up. It's just when you weigh up the probabilities, it seems unlikely that it's a sustainable move. It can happen, but as I said, just in terms of the probabilities, it's more likely, at least what I've seen from my own backtesting, is that I would see a bit of a pop up because people are FOMOing into the market at the end, and then you see it fall back to squeeze out the late buyers right here. And in terms of where we might see some stability here for the S&P, maybe this is also affecting Bitcoin as well. We're seeing a bit of a downside here for the S&P. We're seeing a downside for some of the other stock markets, as I'll show you. We're also seeing, well, at least we've got that massive liquidations for Bitcoin and cryptos, the biggest in history. In terms of at least the short-term support, somewhere around these previous tops at around 6,050 points. And then if we take a look at where that volume begins to drop off, it's around this day here, the 26th. So that price range, it comes in at 5,970 up to 6,040 points. So not far from that now, but it could come all the way back into that bar as well before maybe we start to see some sort of stability here in the short term. Then comes the reassessment. Do we see further downside over the coming days across December leading into that Christmas period? Or do we find stability and then get that Christmas pump up this year? So on top of that, the Nasdaq's also had a new all-time high, reversed. The Dow Jones has been down now from the new all-time high at 45,176, 45,171. This one's really important. The scary 3-day rule, and in this case, it's 3 days down from a very significant top. And the significance of that top is that it's an all-time high at the end of a pretty significant run. Could it be the end of the run? No one knows for sure. We did see it back here in October. You see as the market was climbing to fresh prices, it was enough to hold the market out from a new fresh high for about 13 trading days, 19 days. So basically 3 weeks of our time, but 13 trading days. Of course, it doesn't trade on the weekends, being the traditional markets. And again, 1, 2, 3, and it had another several days down of 10 days, 14 days total. So 10 trading days, 14 days total. And we see it again, so 3 times here. Do note that you've seen it each of these times, and we're still seeing corrections that are lasting shorter and shorter periods. So it is something to watch, but it's always important to backtest these particular rules on the markets that you are following. We use this rule very, very successfully when we're able to call the Bitcoin top here in March, and it looked likely that we were going to see lower prices underneath the old all-time high for a considerable amount of time. I was looking at roughly 4 to 6 months, and it ended up being 7.5 months before we got a breakout of that particular top. So this rule, from what I can see, works a little better on Bitcoin than it does for the Dow Jones. That's a bit of a mini masterclass. If you want to learn more about how we trade and invest and read the markets, we do have our weekly report coming out today. Link in the top of the video description or on the homepage here. You can just click the subscribe button and drop down your name, email address, click the buttons here and subscribe, and this will come out to your email inbox. Lots to do with the yield curve and overbought, oversold conditions, altcoins, Bitcoin in today's report. So that is the free weekly report to you guys. Around the globe, Australia's had a lower swing top in play underneath the 50% extension there. And for China, which is the big news today, it's had a pump up. Look at that bar there, 6% on the day, breaking past 50% on higher volume. The news, Hong Kong stocks jumped nearly 3% as China pledges more proactive stimulus measures. So even the Hang Seng is going up here. And for India, you also saw a pretty decent day there on Thursday last week, a little bit of a pullback to these highs. So the emerging markets are still hanging in there, putting in higher prices longer term here. So where does that leave us now for the 18-year cycle? Same place as we were yesterday, the winner's curse phase. You're seeing more and more of this happen, more from the governments pledging more stimulus, more money. That's exactly what has happened in the winner's curse phase of the cycle. The last years, not months, not weeks, but the last years leading into a final peak before a significant collapse, major recession. We'll obviously continue to follow up to see how this progresses into that peak. So that's a recap of the stock markets today, China's pump. We'll get into the liquidations in a sec, but let's cover off the crypto data here. So the market sentiment and crypto data. This is the crypto fear and greed index. We had huge liquidations, biggest in history, yet it wasn't enough to even scare the market by 1 point. You can see yesterday was 78. We are still at 78. Really not much has happened in the front of the sentiment, and it seems like it's creeping more towards a buy the dip. However, there could be further downside. From what we can see, it doesn't seem like it's the end of the cycle move, but maybe a more longer term local top, as I'll show you in the charts in just a sec. The Google Trends, the words here, we're looking at Bitcoin and cryptos have also been on the rise here, but not back to where they previously were at the all-time high, 104,000. But that might be partly because we saw that massive liquidations for cryptocurrencies and Bitcoin in the last 24 hours. Here it is, biggest in history. It's even about 60% bigger than it was 4 days ago when we had the $1 billion liquidations. We're now at 1.7 billion and much, much larger than the combined efforts of the FTX collapse in 2022. So 2 years and 1 month ago, the 5 days combined was only 1.5 billion. So we're really starting to see a lot more money coming into the markets. Therefore, you're going to see the biggest liquidations, the biggest money in, the biggest whatever in history, because of course there is more money coming into the markets. But what I don't think will change are the corrections. The corrections are going to be roughly similar across the board. And for Bitcoin, we've noticed that they've gotten a little less compared to 10 years ago when Bitcoin was correcting 70 or 90%. Now it's more like 50 to 70, sometimes 80% in the bear markets, and through the bull market, sort of your 20 to 35-ish percent. Last cycle was around 50%. But nonetheless, the point of this is the major liquidations are coming into the game here. Just as I'm filming this, it's still hovering around 1.71. It peaked out at about $1.72 billion liquidated. You can see just eclipses the 5th of December there, where a lot of the longs got liquidated. And again, today, pretty much 1.5 billion got liquidated. So nearly double the amount of liquidations in the long positions here. Over the last month and a half, we've seen the liquidations gradually increase with a few of these massive days that pop out of what seemingly is nowhere. But this is all part of the bull market. We can see with the daily exchange volume also rising to new fresh highs and just creeping over the top here. If we look at all, we are again rising up 130 billion, getting very close to the previous all-time highs. As I said in previous videos, I think this is going to eclipse the previous cycles, just like the last ones. And of course, I believe that's a pretty straightforward thing to assume for the markets because of how much extra money is needed in order to pump up these already extravagant market caps. Bitcoin sitting at whatever $1 trillion in market cap, Ethereum, Sol, XRP. You just need a lot more players, speculators or gamblers coming into the market to dump their money, hard-earned cash in to pump these prices up. So that covers off 50% of our agenda for today. The next most important thing is part of the crypto data, the piece that I love to look at, which is the USDT dominance. It has had a very grinding effect here, 4.2%. This is what we're looking at on the side, down to 3.8. Been tracking it for a while and essentially waiting for a significant breakdown here. And it's basically just been grinding its way to the first support zone, which was 4.2%, and then down to 3.8%. Essentially, that's the dominance. That's how much dominance there is for USDT. So how much money is sitting in the stable coins and not in cryptos and Bitcoin. And obviously in the last 24 hours, we saw a pretty big pump up from that. But interesting to note where it found resistance. Finding resistance at 4.2%, closing underneath that at around 4.08. And we're still sitting on the support of 3.8%. So it's basically in a bit of a no man's land. If it's not above 3.8, we're not going to see much further declines for Bitcoin and cryptocurrencies, because this would mean we're getting more money thrown back into USDT. And if we don't break down from 3.8, well, then the money just sort of sits and floats around USDT dominance, which means where is the rest of the money coming from? Maybe there's some fresh funds coming in from outside, some fiat. But overall, this is pretty much the lifeblood of the market. At least it has been for many, many years, calling all the tops in the market. The volume has significantly increased here. Can it be partly to do with the amount of exchange volume out there and thinking that this is going to go up more? Or is this building into something bigger like what happened back in January, February, March, April of 2021, where we then saw a pretty significant correction after that point? How do we know? Well, the first clue will be closing above 3.8%, at least according to what I'm seeing and how I'm going to play the game. If I start to see this thing close back up here, I would say there's going to be further downside to Bitcoin and altcoins as well. If we started to get any breaks above 4.75, which is a pretty key 50% level, that is going to do some pretty severe damage to the gains that have been had for altcoins and Bitcoin. So make sure you pay very close attention to this chart, USDT dominance. That is going to be some key signals here. And obviously we'll keep following up on the channel. Okay, so over to Bitcoin on the 4-hour chart. Several levels to watch here to give us hopefully some sort of earlier insights. Failure at $98,000 generally would lead to further downside to 93 to 94K, which are the previous lows. And that's the important part now, the 50% level. Any sort of closing above that 50% at 98K is going to be a little bit more strength into Bitcoin than eventually into the altcoins. But yeah, basically failing here over the next 24 to 48 hours, probably going to lead to further downside at 93. Then to the low points, you've got 91 and 92, which then leads to further downside around the $88,000, $89,000 level. So one level at a time until we see any sort of signs of a reversal here. And that reversal would be closing, or at least the first step, above 98K. Then gives you that support bridge, I guess, to close above or test 99 to 100,000. While I'm on BTC on the daily chart, this hasn't been anything too different to previous years. Today is the 9th. We had a shakeout day on the 5th. So extreme volatility on the 5th and extreme, considering where we sit in the market, pretty significant days here on the 9th. So to explain some of the volatility for Bitcoin, as we just saw with the price over the last 10 days, this one is your predictive cycles on the TIA indicator suite. We've got the Bitcoin curves looking at all, which is the blue line, or sorry, the actual, that's what's happening right now, and then all of the bull market years put together on the chart. And you can see the volatility that comes in through December. Some peaks and some troughs and more peaks and troughs before you start to see a run up towards the end of the month, which then leads into January. Not an entirely flat month, but you do still have a bit of volatility in there before you get on to the next month. But nonetheless, we're just watching this particular month right now, a bit of volatility. Back to BTC, obviously we've seen some of that volatility. It doesn't look like too much in the chart, but really the price hasn't gone anywhere. You can see from the open on December 1st, that was at 96,000, and the current close is at 97,000 with two pretty significant swings in the daily chart. Going back to 2023, you can see massive swing there on the 11th, so nearly an exact 12-month anniversary. That day was about 6% down after a pretty significant rise up, and it had followed a November grind to the upside before it popped off through to around 44, 45K. Year before that, going through into 2022, big day down there on the 16th, higher lows, continued to grind at the bottom before a big pop up. So this is looking at it in the bear market, and November also had decent grind there after the FTX collapse, and then the market ran up after that. You go through to the actual bear market year. December 4th had a very significant volatile day after November putting in that top, and then December was down. So that's a bear market year to a bull market year in 2020. So a 4-year repeat here, a grind up for November, leads you into December. Not a huge correction here for 2020, but still December wasn't necessarily totally clean for the first half of the month. There it starts there, and then you have to wait until around 16th, 17th before 2 days of a pop, and then another grind, and then another couple of days of a pop up, and you basically get to the end of the month with a bit of a grind out into January. And again, previous year to 2019, bit of a dump into that final low, and then a grinding effect into January. That was around the mid-month for December. 2018 also had a grind down, a few scary bars after those lows in November, a grind around lower, and then a pop up towards the end of the month. And that's in a bear market year in 2018. The 2017 top, 3 very significant pullbacks here after a massive day on the 7th. So the volatility is what we're looking at here. That was a 31% correction from the top down to the low. Very, very volatile days. 6th, 7th, 8th, 9th, 10th, and then we ran into that final peak in the 17th. There was a grind in mid-November running out of that point. And let's have a look at 2016, which was another election year before that big run up for 2017. You had a couple of days here. 5th of December was pretty much the most significant day there, only around a 2%, but you already had pretty significant corrections going back to June and August as well, which lined up with August of this year. That significant low, Bitcoin 49K on August 5th. You had a very, very big drop there on August 2nd, exactly 8 years ago. They're grinding up, and a similar sort of effect here. So in the intro, I asked the question, is now the time to be fearful of a final top, or is now that buy the dip? And then we can keep going back, keep looking at more and more history, but I think you start to get the point, especially when you look at the movements here on the cycle. You can see that BTC typically around this time has some sort of volatility, and generally it looks like corrections. Doesn't mean today was the final day of the correction, but it seems, I mean, if we've got to throw the probabilities there, it's more likely that this could be a better opportunity. So if you're finding opportunities in some altcoins with this massive liquidation, the biggest in history, now would be roughly that time that you'd be looking out for opportunities to continue to position yourself in the market. Doesn't mean that it can't go further, because we've had a close underneath the 50% level, still not into a stronger period. And if it does come down lower, you've got roughly 5% to the next low and 6.8% to the November low, and then to the 17th of November low, there's around an 8.8% decline to the next swing bottom. And if we look at the 50% level, down to around $85,500 from today's close, that's a rough 12.3% down. So overall, it's not a bad time for that DCAing opportunity, but do note that the prices can go lower from here. On the flip side, if they go higher, you'll notice that with some closes to begin above $98,000. which I think is a good place to take us over to the total cryptocurrency market caps and have a look at some of those altcoins. You can see we had this big volume to break out to new all-time highs for the total crypto market cap above the old top of 3 trillion. And for this week, the data, at least today, which generally rejigs itself over the coming days, is the largest volume that we have seen in history for this chart. However, I would want to wait until the end of the week to get a clear confirmation on that particular volume data. The main volume I'm looking at here are the weeks that have already occurred, the green weeks. It's pushed through to new all-time highs, and at the moment seems to be consolidating above that old all-time high. So it's important to note the invalidation here would be closes underneath 3 trillion. That would be a rather the first signs of a weak position, and then back under 2.7 trillion, which was the top in March. They would be the ultimate weak signals that this was all just a blow off top here, and that the market needed more time to consolidate. At this stage, there hasn't been any signals to suggest that it has to go under that, under the 2.7 there, which is also the 50% level of the entire move. It could just test those levels at the largest correction that one would expect to remain in a healthy, strong bull market, but it doesn't have to go that far. For the true altcoin market cap, we were watching this yesterday, looking at we're approximately here. So I guess that's another good segue to say, watch the videos, subscribe to the channel, all that sort of jazz, right? Because we're waiting for this particular correction to come up either here or in the next few weeks, another correction as the market continues to grind higher. So exactly yesterday, we're watching this thing run up, and now in the last 24 hours, we've had a pretty significant correction, obviously being that liquidation. So this is the true altcoin market cap, potentially looking very similar to what happened last time, breaking out of the tipping points and then testing those levels again because of the extreme excitement, the extreme greed that's come into this move to the upside. And we saw that with ETH running up to these tops. Again, another pullback here on the weekly chart, still above 3,700, which is the first signs for strength. This is the top here at 36, and then also the 50% level at 37. So overall things are looking relatively okay, even with this pullback. Anything above 3,200 is a strong area for ETH to consolidate, to then get back to to test some higher prices around that 4,000, or where we were looking yesterday around 5,300, which will happen over the coming months. ETH BTC also had a pullback. Fortunately, didn't break down from any of the swing bottoms so far. Low to high on our 50% comes in at 0.036%. So still doing all right, but it has hit 4% there at a previous old top. So ideally, you want to see this thing not go below the 50% or that swing bottom there at 3.2%. Now, Solana has a similar pattern to the true altcoin market cap, not above the old all-time high, but looks like it's consolidating at higher prices. It's still early days. It's only been a week for this pullback for the true altcoin. For Solana, it's been 3 into the third week, but it's still holding above the 50% at around 187, the tops at around 190, and the previous top there at around 210. So while the consolidation remains above $180, it's still relatively strong for Sol. Just means it could be a better entry point. To date, it's down 23%. To the 50% level, it would be down 29%. And the previous overall moves have been 44 and 47. So pretty well on track there for an average move to the downside. There's 37% in the last move, down to $78 before it moved higher. So nothing really out of the ordinary happening for ETH or Solana at this point. The SUI, however, if this was to close here on the week, we do have 6 more days to go. But if it was to close here, then that is a weaker signal. Why? Well, you got the close beneath the previous weekly swing top. Ideally, by the end of this week, it's closed above $3.94. So call it around $4 for a sign of strength after the massive liquidations and pullback that we've seen in the market. So $3.94, that would be the key area for SUI to hold above. To the downside, anything below $3 is going to be rather weak. And then 240 is basically your last line of defense here for SUI, should it continue to consolidate for the rest of the bull market to go a little higher. Breaks under that 240 take you back to the previous tops at 220, 230 level, and that becomes rather weak. So ideally, if you're a SUI holder, it doesn't go below 240, and ideally it stays above that $3 level. For Pepe, it decided to push to a new fresh high. Right now, it's finally having its pullback, and it has failed at the 50% extension. So it's this entire move projected to the upside. The invalidation point below this low here at 17, so 1700 or so, that area to the downside is about a 35% correction. So the way you look at this is your risk and reward, the downside to the upside. If it was to fall, this is basically the line to say, seems like things are getting weak. That's about a 35, 36% move away from that 50% level, or the current price as I film this, that's about a 33% move to the downside there. But to the upside, you'd be looking somewhere around the 100%. It could be a 38% move, or potentially higher, just depending on your own trading rules and what you're willing to risk for the reward. And finally, XRP BTC has had its pullback. If you were looking at XRP at the beginning of this cycle, around November of 2022, this is my little coping strategy here, or if you really just want to get into it, it's the risk and reward of a trade. Throw on BTC, and it's basically at the exact same level as it was at the beginning of the cycle. So what I'm saying here is if you threw 10,000, 100,000, $1 million in Bitcoin or in XRP at the beginning of the cycle, at the bottom there, that close, you're at exactly the same price point. Well, you'll be 3% up on XRP right now, unless it continues to fall during this correction. So that's where the Bitcoin versus altcoin chart comes in handy. It allows you to see what was that risk worth it to make the same reward that something that was going up the entire time. It all comes down to what sort of trader or investor you are. Do you like to be in pain for 2 years, just getting absolutely slaughtered week after week after whatever, month after month for 4 weeks of excitement? Or do you want to be in something that has less volatility and just continues to grind slowly to the upside? That sort of, that longer play in the markets. Either way, you ended up with the same result in this case, but it might not always be that way. Maybe Bitcoin doesn't make it next time and XRP has a pump and a dump and they both die out. We just don't know, and that's the game that we ultimately play here. Thanks again for your time. Hopefully that's helped out with the bullish and the bearish signals and what I think is happening in the markets right now, especially as we haven't pushed to a new fresh high, or at least been able to hold a fresh high since the breakout here in November. I'll be back with you tomorrow for more updates. And if you've got some other altcoins that you're interested in, let me know in the comment section down below. I've covered all of the crowd favorites. Hit that like, subscribe to the channel. I'll see you back here tomorrow for another update. Until then, take care and peace out.